Hi, this is Anthony again. Welcome back to my show. Nearly a month ago, much of the world woke up to find that the so-called Western industrialized powers, that is the United States, Europe, much of the British Commonwealth, and countries like Japan, are in a heated-up Cold War with the Kremlin again. To the casual observer, one may have been under the impression that the Cold War ended in the late 1980s and early 1990s, when the Iron Curtain fell in Europe and the Soviet Union collapsed into 15 independent countries. For a while, particularly during the years that Boris Yeltsin was president of the Russian Federation, ties between Russia and the West warmed up. But eventually Yeltsin, who was in an extremely fragile mental and physical condition, turned over the reins of power to his prime minister, Vladimir Putin, ushering in a 22-year-long slide back towards the Cold War between the two former blocs. This current war in Ukraine, which quite honestly could end tomorrow, or could drag on potentially for years, brings with it billions of dollars of destruction in Ukraine, as well as catastrophic economic conditions as a consequence of the sanctions imposed by much of the world on Russia. These considerations, along with the price of petroleum products, which had started to go up before the war, but certainly are not being helped as Russia is a large supplier of petroleum and is potentially facing sanctions on that segment of their economy. In the United States, we are facing an inflation rate of about 10%, which is the highest that it's been in decades, but of course for some countries 10% would be a low inflation rate. And after a number of up years, broad stock indices are now in, or at least have dipped into correction or bear territory. Then there is, of course, the worldwide pandemic, which is entering its third year. Fortunately, on many fronts, death rates from that are declining, but the economic impact remains, and there are a number of unanswered questions as far as what the long-term consequences of supply chain disruptions might be. Out of all of this has come warnings about food shortages, in particular a decline in the amount of wheat being produced in Ukraine and Russia. Ukraine used to be called the breadbasket of Europe, and while I don't have any hard facts, my gut feeling is there's not a lot of wheat being planted for the season currently in Ukraine. I would also guess that a lot of what is being produced in Russia might be sanctioned and not end up on the world market. So is there a way to profit from an increase in wheat prices if one thinks that prices will go up due to these various factors, in particular military events in Ukraine? There is an exchange-traded fund that deals with wheat. It is called Ukrainian Wheat Fund, ticker symbol WEAT. When you look at the chart for the past 10 years, the price has decreased by about 50%, but year to date it has increased about 45%, and that is down from recent highs. Before you invest anything in it, please think about the situation. Now that the market's had about a month to digest the ever-changing situation in Ukraine, traders far more sophisticated than you or I have factored in what they think prices are going to be based on expected harvests. It could be that those prices go sideways for quite a while and then go down as more grain eventually is produced and gets on the market. If that's the case and you bought at current prices, you'd probably lose money. And again, before you buy anything, do your research and look for the pros and cons. I've not bought the security, and I don't know if I will, but there's a possibility that I might buy 10 shares, just as a speculation. If you do end up purchasing shares in this ETF, please be very cautious. Agricultural commodities can be very volatile sometimes, and trying to determine what will happen in Ukraine and Russia is very difficult. By the way, they also sponsor ETFs for corn, soybeans, sugar, and other agricultural products. I will provide a link to their website in the show notes. So I'm going to end here. I don't want to say any more about this ETF, as I don't want to sway your decision as to whether you might invest in it. Remember, I'm not a financial advisor, and even if I was, you shouldn't be listening to people that you find on the internet. Whatever you decide to do when investing, good luck. But it takes more than luck. It takes patience and research. Search what you want to invest in and make sure that it is suitable for your situation. And then have the patience to hold on for the long term in most cases. But also be willing to cut your losses on obvious losers, and don't be afraid to lock in profits on your winners. I do really appreciate everyone's comments on my videos. Even if you really disagree with me, I would still love for you to leave a comment. It would really help me if you subscribe to this YouTube channel. It doesn't cost you anything. You just need to click the subscribe button below. Also, please view my other videos, and if you like them, click the like button on those. I'm on Instagram at AnthonyRRMills. You can follow me there. I sell old stock and bond certificates, coins, paper money, and books, among other things, including silver coins of various types on eBay with the username stock_tycoon. Thanks for watching.